Welcome to Bears in Exile. Today is Wednesday, April the 17th, and this is a quick hit on the indexes. There is so much to look at tonight, so away we go. Starting off with the Dow, a ugly down day, which we were looking for a down day, so fantastic. And there's lots to examine in this. For one, you could say, alright, we had the bounce back. We came back down. The bulls are finished, right? Maybe. I actually think that there'll be could be one more attempt to the upside, but yes, things are looking bad. We should have an attempt at the previous high at some point. I don't think that yesterday really counts because it was a snapback after the big down. So I do think that at some point there will be an attempt on this. Not to say that that's going to be tomorrow, but it's logical. Beyond that, we made a new recent low today. We did not have a closing new recent low, but we had a pierce shadow new recent low, and it pierced the upper price consensus level. All of this is good. This is very nice. Oops. We have everything pointing down, so the bears are good there too. We don't have a bottoming area in the heat map. There's not too much to worry about. Here's the problem. If we scale out, we can see the fast stochastic is already getting pretty darn low. And yes, it's for the most part alone in that category of being kind of too low already. But before too long, it will be too low, and it will need to have a move up, which will be a secondary reset. I don't know that everything else will be aligned low enough for a secondary reset, but according to this, there should be one, or a partial one, in which case there should be a bounce. I do think that will happen. Tomorrow, you know, the bulls can look at this and say, oh, we had a higher close, so you know, we've already given the bears all that they're due. So for me, and it's still holding above the upper price consensus level, it still has not touched the bar. The expectation for me is that at some point it will test the current high, and you know, just try to slug it out. I don't think the bulls are just going to roll over instantly. I mean, we saw that yesterday. So I wouldn't expect the high from yesterday to be taken out tomorrow. But it's possible, I suppose. If they really want to catch some people unaware. Get a higher close than yesterday, tomorrow, which is, I think, is unlikely. Then I think you'll have a squeeze. But I would actually just expect to have something of a higher close than today. But maybe I'm wrong and it dumps out, and that's fine too. So still good alignment, but I think in the short term we're running out of time for, you know, the complete move to the downside. We have to have a secondary reset on the stochastics at some point. And I think that'll be sooner rather than later. And once that's completed and we have that reset done, this thing will be in fantastic alignment to finish out its move to the downside, and it easily could be very crushing. I'm going to look at the Dow Jones Transports, because this should be in the lead. You'll notice that it is different. Candle-wise, it is not as bad as the Dow Jones Industrials. But position-wise, of course, it's much worse. We got back inside the bar yesterday. We fell back outside of it today. You can see behind all of this, the long-term moving average is really starting to come down and compress. That should accelerate over the next few days. But, you know, we still have an intact structure. Beyond that, though, here's the other thing. We have an intact structure that still has semi-decent separation. So it should have some force to suck things back into itself. We have positive divergence on the MACD histogram now. Oh, you know what? We don't. I am sorry. We do not. We don't have a lower low. So that is totally wrong. Everything pointing down, but you'll also notice that things are already much lower on the transports. Once this one finally does get a bounce, it probably will give some hope to the rest of the market. So less time here before we get that kind of a bounce, and that should help the overall market. Another reason why on the Dow, I'm seeing that we're running out of time short term before a secondary corrective move. Going on to SPX. We talked about this one last night. We said that this was a very nice bounce. It went a little bit higher than we had hoped, but that the right thing to do would for it to come down and sit on the bar, damage it, and collapse it. And that's exactly what it went to do today. It is sitting on top of it, actually a little bit of penetration, but essentially sitting on top of it, and we want to see it compress. So this is very, very good. I know that after hours, the markets are down a decent bit, a little bit, but it's way too early. I think that from where it is now, it would be right about here is where it is at this very moment. So this is all support. I don't expect it to, fall through the long-term moving average bar all in one go tomorrow or anything like that. We'll see. But there should be significant support in here. Long-term moving average bar, previous lows, and everything that I said about the Dow applies to SPX. And as a matter of fact, you have even less room on the fast stochastic getting towards the bottom for the necessity for a secondary correction. Going on to the VIX. Another reason why I believe that we will probably bounce tomorrow to some extent. We have plenty of good things going on with the VIX. We noted that originally when it got above the 200-day moving average, we're now back above the 200-day moving average. I don't believe the fight is going to end and all of a sudden we're going to be above the 200 moving day average for, the next month or 3 months or year or whatever it is. I don't think that this is a sea change yet at this moment. This is just very positive. We made a new recent high today. Excellent. Not on a closing basis. It is very, very close to the upper Bollinger Band, which normally is a problem for the VIX. So it going down to some extent at this point is totally natural and would produce a bounce in the overall market. I suppose there could be an NDE or worries or bombs or whatever that continue to push this up. But in the very short term, as in tomorrow, I think that it would be completely natural for this to pull back. The question is, can it maintain above the 200-day moving average or not? If it is able, that should be a huge tell that the market is in deep doo-doo. And we can play off of that, but we have to see tomorrow. This was a very impressive move up today. We do have a blip in the heat map today, which should be expected with the move that it had. Everything is pointing up, so overall, yes, it looks good. The CCI is massively high again, just like 2 days ago. So that is a big warning sign, but everything else does have room to move to the upside. So just want it to hold the 200-day moving average, and that should give us some good information. If we do that and have the CCI go down, fantastic. It occurs to me that I did not look at any 60-minute charts. I'll go back to SPX. And 60 minutes. Here we are. Aha. Descending highs. Excellent. Descending lows. Excellent. But we can also see a couple things. 14-day RSI moving average has completed its move on the downside. 60-minute time frame. We have positive divergence in the MACD histogram. Yes, this one is correct, unlike the Dow. Moving up on the RSI, the CCI, the stochastics, and coming off of a bottoming blip in the heat map as of essentially right after the open this morning. You could look at this and say, well, we're going to have another higher low and make a lower low. It's entirely possible. But the alignment of all of this, I don't think seems to support that. At the very least, it should attempt a run at the previous high, which is this one right here. Not the current high up here, but at least this one. Now if this one were to break, I think that you will have some covering, and that would open the possibility for the move to challenge the current high. The question is, do we exceed that, or do we fail before then? And like I was saying a few minutes ago, it is down in the after hours. Currently right, I believe it's right here. So regardless if it's down here or not, this isn't going to really change. You'll have everything go back down, meeting the 14-day, which actually would provide more fuel for it to go up if it decides to go up. And then you could have a potential higher low, which would inspire the bulls to do more. So very interesting, very interesting. Going on to IWM for the Russell. Here we are. And like many things, we have a new recent low today, which is bearish. It is maintaining below the long-term moving average bar, also bearish. And will collapse it, damage it some more. All good. We do have positive divergence in the daily now. It is correct. In the MACD, in the CCI, in the stochastics, that could be broken. And very, very slightly in the RSI, that could easily be broken as well. And just like on most of the charts, fast stochastic, very low. Getting to the spot where it should turn around. This low is right behind it. So these are just a couple of little warning signs to me. We do have a tiny blip in the heat map, nothing to be excited about, and we're coming in on support. So there's a lot of reasons why we should get a bounce of some sort, very close to these levels. And the low of the day today, yeah, it came into that level loosely, and that's where it bounced. And looking at the volume information, now this is fascinating. This is the monkey wrench to my idea for it to bounce tomorrow. Been watching the majors for a while. We crossed on the on-balance volume today. We still are moving up on the accumulation distribution, but on-balance volume crossed the trigger line today. Amazing. We've been saying that at some point, someday, somehow it would, and it did today. So the question becomes, are we able to maintain it for, a day, 2 days? You can see back here, we crossed through it and immediately bounced back through it to the upside, and then came down, and then went back up through it. So while this is huge, while this is very important, and I'm very happy to see it, I just want to see that it can actually maintain below it, because I'm still a little bit skeptical. Beyond that, the 3 minors are still negative, and accumulation distribution is still green. So 4 reds, 1 green. Really want to see and make sure that this one is going to stay red. If it does, then my bounce idea is probably wrong, and we go down. If it's able to maintain below that, whew, all bets are off. It's going to get ugly fast. And that's it. Good reasons for both sides. I think there's a little more reasons for upside, but we shall see. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.